Hello and welcome to another update video about Bitcoin here. Let's take a look at the latest Bitcoin developments. Yesterday I showed you here on the chart the triangle. We broke out of the triangle to the downside as it seems, and let's take a look at overall here the 1 hour chart where we are. We can still count this here as a wave 1, that isn't changing. We can still count this here as a wave 2 in purple, that isn't changing. With that latest wick down to 18,800 overnight, it didn't invalidate here any possible bullish scenario, which is still possible. Yeah, told you before, until we break below the wave 2 low here in purple, which is at around about 18,600, we can maintain the kind of the bullish wave count here on the chart to investigate if there is something bullish going on here. But I explained to you yesterday in detail what all of this means. So if you're interested to find a bit more background information about this wave count and what needs to happen to really confirm a bullish breakout, check out my last video from yesterday. Overall, the key points remain, volume. We need to see more volume. We need to see us break above, first of all, this resistance area between 21.3, 21.7, and then the 23 to 23.3K area. These are the key areas to break through to not only, to first of all confirm the bullish wave count, but also to confirm from a price action point of view, because you want to see the evidence in the Elliott Wave patterns, 1, 2, and you want to see the price action matching it, which means we need to take some structural resistance levels out. You can see the key levels here. The more imminent relevant levels you can see as well here on the chart. We haven't broken them still. They are still very relevant, the ones that I showed you here a couple of days ago. So this zone here between here 18,940 pretty much, this low, yeah, and this low at 19,040. So it's a bit of a support zone. You can see how relevant that again was. And then the resistance is here between 19,550 and 19,760. So this would be the resistance, the support area to break through to the downside, and this here to the upside resistance. So we are in a range clearly, as you can see. You can also see here that we broke out of this what appeared to be a triangle to the downside, and however this was brought up fairly quickly. Nevertheless, if we draw this trend line, you can see that we are now here on the 1 hour chart below the trend line. So it's actually at the moment, I would say, a rather bearish signal. We have not managed to reclaim this trend line. We actually broke out to the downside, retesting it from below. And if we now see something like an engulfing red candle, in my opinion, that would confirm further downside, because we're now holding below the previous support, now resistance line. We confirmed it on the hourly already. And here's another red candle. Now, not a very strong one, but if this becomes, for example, an engulfing red candle now, that would confirm further downside, and we would take out this support level at 18,940. Let me just close the window. There's a plane flying or something. You might still hear it. So I'll just carry on. He'll be gone in a minute. So breaking out to the downside here, and then if we take out this swing low at 18,600, that would take out the possibility that this here could have been the end of the wave 2. Yeah, and then we just need to get familiar with the possibility that this here might have just been a wave A, this a B, and the C is still coming in a bullish count. The wave C, however, would need to stop above 17,600, and the key level for it to stop would be here the previous swing low at 17,900. So and unfortunately we're here still in a range, and we need to wait for a clear signal of the market. But this might have been a first signal here, a breakout of that triangle to the downside. But it's a quiet weekend. There's we can't deny that it's a really quiet weekend. So this is pretty much where we are, yeah. And now, unfortunately, we need to wait here for a signal of the market. Again, could be a bearish signal, and then like an engulfing red candle. That is what I'd be waiting for, and then a breakout to the downside below this support line of 18,940 would confirm the move down. If we can reclaim, of course, the trend line, that would be rather positive. But again, here, I would try to wait, or I would want to wait for a retest. So basically reclaim it on the hourly retest, and then we can start to move up from here. Have to take out first 19,340, and then here the next resistance at around 19,500. Again, it's a bit of a dynamic zone here, and also depends on which time frame you're looking at it. Overall, very little volume on the weekend. Yeah, even that move down yesterday didn't really see a lot of volume. It was bought up very quickly. Let's go and take a look at the 4-hour chart here. On the 4-hour, again, sort of the bearishness, I would say, increases again. We have the ADX going high in red. Yeah, that DI line in red, moving away from the green line, which means it's rather negative momentum going on here. Here again on the 4-hour chart, a bearish crossover on the RSI, which means if that purple line crosses below the yellow line, we call it a bearish crossover. Now it's only the 4-hour chart, but that will translate over onto the daily chart. Here you can see as well that on the MACD, we're already rolling over. We cannot see it yet on the 8-hour chart. So this is what, but even here on the 8-hour, yeah, a bullish crossover was avoided now here on the 30th of June, here yesterday again. So again, also here the bullishness is just missing at the moment, and then this will translate over onto the daily. Here we still haven't had any bullish crossover anyway on the here as well. We had a bearish crossover a couple of days ago on the RSI, and also here negative momentum or positive momentum is decreasing again on the MACD. So unfortunately the chart just indicates uncertainty and weakness at the moment. And as I said before to you, I would not be surprised if we see one more lower low. But also again here, every low can now be the last one very clearly as well. And here we have no green candles in this whole move down, to be honest, as well. So we are heading further down on the daily. Let's take a look at the weekly. How is the weekly looking? Also here, last week on the weekly, we had another bearish engulfing candle. Well, that is actually this week's candle. So a bearish engulfing candle. I would be very surprised if this gets if we get a green candle this week. I mean, we're currently hovering around the 19K area, and to get a green candle, yeah, we would need to get above 21.5K. Now, I would be very surprised if that happens today. So I think we are going to have another red candlestick, and this is just in line what we have here on the weekly, where we can also draw a trend line here. So until we really break this trend line on the weekly, yeah, there is also probably limited potential for any bullish breakout. Yeah, so there's a bit of a channel going on here. So we're following it. Yeah, we're following it nicely at the moment, and this is something else you can put on your chart. I think that might give you a clue about when to get more bullish. Now, if we then go back onto the onto the hourly chart, and we take a closer look at the channel, yeah, this would be very much in line. Yeah, a breakout above the channel would be very much in line with a breakout above this resistance area here. That is what we need to see. Need to see this breakout above that level. Until we go above this level, the downside potential is still very, very real. So again, to get more bullish here, the wave count allows it. Yeah, and this is important. The wave count would allow it. The wave count didn't allow it here, that we start to move to further into sustainable upside. Yeah, this wave count here that we had and the structure of the chart did not support sustainable all-time highs. I told you that, and as a result, we also moved down lower. This here would allow it, but we need to start. We need to start moving now, or yeah, we will see a lower low. And at the moment, though, it would be all good to start up from here. It would be fine. Yeah, we can count a 1, we can count a 2. Next, we would need to see wave 3 by going through this resistance area, then a 4 down, a 5 up. That would be an entire impulse. That would then be corrected down in a 1, 2, 3. Then we would see another impulse up, correcting down in a 1, 2, 3. In an ABC, moving up in 5 waves again, and so on. But to do that, we need to see significant price action above the channel and above this red resistance area. So until we get above that level, still a lot of downside pressure. We need to move out of these selling zones, yeah, and we need to bear in mind that there is manipulation going on, yeah, absolutely, and it could be that whales, market manipulators, are holding the price down at the moment, so they have more time to accumulate, because we can currently see evidence that whales are accumulating very clearly. People who are selling now are short-term holders, retail investors that sold high in the last 12 months, yeah, and they are selling. Whales though are accumulating, and whale addresses are going up, not only for Bitcoin but for various altcoins as well. I shared in the Telegram group here a few days ago, loop ring whales are accumulating, Matic whales are accumulating, and I'm sure that is the case for other cryptos as well. Alright, so hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, check out the channel membership. Thanks a lot for watching. Bye bye.